this episode, we're going to look at what you should be looking for in your superannuation statement. No matter where you are in your financial life, Jason, your superannuation should be working for you. So once a year, you either get a letter in the letterbox from your superannuation provider, or you might get an email. You need to understand what's in that statement, if you can.
Yeah, well, most of us take that envelope or that email and file it in the circular filing cabinet.
Or the third drawer down.
Yeah, so and we shouldn't do that.
Okay.
And look, if we're getting more than one statement too, that's a red flag. So the average Aussie, I think, has about 3 super funds. Mm-hmm. That's too many.
Okay.
And we really should be getting one statement each year.
All right. Part of your superannuation statement will describe fees. What level of fees are acceptable?
Yeah, look, I think, as we've touched on in other podcasts, the level of fees really depends on the amount of service that you are getting and if you're paying for advice or not. But a rule of thumb, I think the average fund, I think, would charge 1% of your assets under management. If you're paying for advice, you might pay up to 1.5%. But if you're paying over that, or you're paying for advice and you're not seeing any value, then that's probably another red flag and time to have a review.
So how do you know if your superannuation fund is performing for you?
So difficult. Unfortunately, we've got hundreds and hundreds of funds in Australia. There is no real regulation on what can be called a balanced fund or a growth fund and what makes up those funds. So it is difficult, but getting easier. So there are some websites out there that you can have a look at. CanStar is a good website for looking at your fund performance against an index. I think Choice is even relevant in terms of having a look at where your fund sits. Transparency is important and is becoming better and better. And as of 1 July 2021, funds will have to report their own performance against a benchmark. And even if they're underperforming a benchmark on average, they actually, for I think it's 2 consecutive years, they'll actually have to write to you and tell you that you're underperforming. So it's going to get easier to compare returns. Ultimately though, it's up to you to know how your fund's performing and if it's going okay or not, especially if you aren't paying for advice.
Anything else you should look for in your superannuation statement?
What have we covered? We've covered fees, we've covered returns. You should look for things like life insurance. So have you got insurance in your super fund? Do you need it? Is it enough? Is it too much? And the types of insurance we're looking for in a super statement are things like life insurance, total and permanent disablement, and sometimes even salary continuance or income protection. So if you've got those covers and you need them, great. If you've got them and you don't, do something about them. If you've got 3 funds and you've got those covers in all 3 funds, then you need to do something about it as well. And finally, just make sure that if you have got your fund statement out and you're reading it, you'd be rare if you're doing that, but if you are reading it, look to make sure you've got your nominations in place as well. So that's when you've sort of nominated your estate or your spouse as a dependent to receive those funds if you do pass away.
All right, well explained once again. Now, is this something you sit down to discuss with your financial advisor, or are you suggesting that we become a little better at reading our superannuation statements individually and personally?
I think both. So your advisor should be directing you towards having a fund that does tick all those boxes. The fees are acceptable, you're getting the service that you want, and your returns are transparent and you know where you're at, and you've got the right mix of investments for your age. But Australians are typically poor at superannuation. I think, without offending anyone, we like to blame other people for when things go wrong. So take a bit of ownership, read your statement when it comes through via email or mail, understand where your money is, how it's going. Little bits and pieces picked up and tweaked and improved over the years can make a very big difference come retirement time.
Thank you, Jason. And don't just wait for your statement to arrive. Make sure you know what your superannuation is doing for you before it turns up in the mailbox or in your email.
Yeah, look, you don't have to wait till August or September to have a look at how your super's going. Everything's online. You can log in and have a look at your balance or your returns at any time. You can call your advisor at any time and you're encouraged to do so. So there's really no excuse to say, I don't know where my super is, I don't know where it's invested, I don't even know how many I've got. If you're in that camp, then you do need to seek some help.
Another important one when you get your statement, should you assume that your employer is making the contributions that it says on your pay slip?
Good point. No, the answer is no. So an employer may not paid the superannuation contributions they say they've paid on your payslip, either by mistake or unfortunately even deliberately in some cases. So when you get your super statement in the mail, another important thing to tick off is that the amount of contributions it says on your statement match those that you expect from your employer, and be careful as the superannuation guarantee payments or amounts increase each year and your employer contributions change, just be careful that your employer changes.